Hey everyone, in this video I'm going to do a request from longtime subscriber Ron Matthews, who asked which one is a better buy, Mercado Libre or C Limited. So I thought that would be an interesting video, so that's what I'll do in this one. Thank you for your request, and once again, if you would like me to do a video, ask me in the comments section down below. Now, I'll compare these two across several critical financial metrics, including revenue, cash flow, return on invested capital, and valuation, along with their next 5-year prospects to determine which one I think is the better buy. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so starting with revenue, both of these e-commerce companies have demonstrated strong revenue growth. Mercado Libre with 14.47 billion and C Limited with 13.06 billion have increased significantly over the last several years, as you can see in this chart here. Now, C Limited, its growth rate has slowed down, while Mercado Libre has continued to grow at a solid clip. Now, the Latin American economy is one that I'm bullish on in terms of its growth over the next several years, especially the online category. E-commerce in that region is growing at the fastest clip than the e-commerce region in South Korea, where that region is already a larger percentage of its online sales or it's a larger percentage of total sales are happening online compared to in Latin America, where there's still a longer runway for growth there for a larger percentage of sales to go online. So, and typically that's going to be the case here with this region. It's growing at a faster clip. It's less developed than the South Asian economies. So the Latin American economy will grow faster, but it's more unstable than the South Asian economies. Now, the next metric I wanted to compare these two on is the cash flow from operations to sales. In this metric, Mercado Libre has the lead, but C Limited has done a great job in catching up. See Mercado Libre at 35.5%, C Limited at 15.92%, but C Limited has been closing the gap quickly, and it wouldn't surprise me if over the next 5 years, C Limited surpasses Mercado Libre in this metric. But for now, Mercado Libre is well ahead of C Limited. The next metric I wanted to see is the balance sheet, and the method I'm using to compare their balance sheets in this video is the debt to equity ratio. And it looks like Mercado Libre has more debt to equity than C Limited, which the higher number is less advantageous in this metric. So 1.42 versus 0.5 for C Limited, meaning C Limited has the better balance sheet compared to Mercado Libre. Looking ahead for the next 5 years, according to the analysts that are following C Limited, they think its earnings per share will grow by 128% per year for the next 5 years. An optimistic outlook to be sure. That's partly the reason why I felt C Limited stock is such a great investment. I recently recommended C Limited stock as a buy. I recently reiterated that recommendation. I've had C Limited stock rated as a buy for some months now. Meanwhile, Mercado Libre is expected to grow earnings per share by 45% for the next 5 years each year. Now, that's an excellent rate of growth as well. Not as large as C Limited, but still a really nice rate of growth here for Mercado Libre and C Limited. So another important metric to compare is on the return on invested capital. And in this metric, Mercado Libre at 14.15%, again, well ahead of C Limited, but again, C Limited closing the gap, making excellent progress here on this metric. 1.58%, but that's up huge from negative 90% in 2020 all the way up to 1.5%. This metric measures how good a company is at taking investor capital and turning it into profits. Taking money from investors and turning it into profits, which is the name of the game. It's the name of the game if you're a publicly traded company. It's getting money from investors, turning it into projects and services that turn into profits and cash flow. How good are you at doing that will determine the return that shareholders receive from investing in your company. Now, of course, there are some psychological components as well, which determine how much an investor is willing to pay for a stock. You can see some stocks turn into a meme stock and their price explodes higher for some short-term period of time. But for the most part, the profits, the cash flow, determine what investors are willing to pay for an investment. And the better you are as a business in turning capital into cash flow, capital into profit, the better your stock price is going to do, the better return your investors are going to get. And finally, I wanted to compare these two on their valuation, and I chose to use the forward price to earnings ratio. And according to this metric, Mercado Libre is a little over 50% more expensive than C Limited, trading at a forward PE of 30.75, compared to C Limited trading at a forward PE of 20. Now, if these two were trading at the same valuation, I would choose Mercado Libre and it would be a no-brainer. But because Mercado Libre is more expensive than C Limited, I have to decide if Mercado Libre has earned this much of a premium valuation. Now, I acknowledge that Mercado Libre does deserve a premium valuation over C Limited because of the better return on invested capital, the better cash flow from operations to sales, and the better revenue growth over the recent past. However, given that C Limited has a better future and increase in earnings per share outlook that's much better than Mercado Libre, and given that C Limited is closing the gap on those critical metrics, even though it's behind Mercado Libre, it's making excellent progress in closing the gap in those metrics. I feel that a premium of over 50% is a little bit too much to pay for Mercado Libre over C Limited. So if I had to pick between one of these two excellent e-commerce companies, I would pick C Limited. C Limited would be my choice between these two. Although, like I mentioned already, I have C Limited stock rated as a buy, and I've also had Mercado Libre stock rated as a buy. Although I haven't updated my recommendation for Mercado Libre for some time, I have had it rated as a buy for a long time. In fact, early in 2023, Mercado Libre was on my list of top stocks to buy in 2023. And then it started off so hot in 2023 that after, I think, 3 months, I took it off my list and told investors to take profits in Mercado Libre stock because the price increased so much in the first 3 months. I still kept it on my list of stocks to buy, but just not on my list of top stocks to buy. And so in this video, I'll remind everyone that I still have Mercado Libre stock rated as a buy, for all the reasons we saw in this video. Excellent forecasted earnings per share expectations for the next 5 years, a growing return on invested capital, a growing and solid cash flow from operations to sales, operating in an e-commerce industry that's growing and in an economy that's growing itself. So all aspects of the company looking strong. Of course, there are risks. Both of these companies have significant risks, but evaluating the risks versus the reward are worthwhile, I think, for each of these two. But again, I would choose C Limited if I had to pick one, but I would say both of them are buys in my opinion. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.